Shannon. Now this is podcasting.
Hello, everyone. We are live, and I'm on the bottom of the Audacity recording now, so that's going to throw me off, but we're okay. Hope you guys had a good week. Donald Trump was elected into office. What? Donald Trump was elected into office, and so we've got something a little special today because of the results of that election. Could be pretty significant.
A smidge of optimism.
Yeah, smidge of optimism. I wouldn't say get too excited, but
cautious optimism.
Yeah, cautious optimism I think is fine. But Trump has talked a lot about, well, first of all, hello, here's Jason.
Hello, everybody. Good morning, good afternoon, or good evening.
Yeah, whatever it is for you. So there's a potential here for things to go well. And in particular, there's a potential here for things to go very well for people who own Bitcoin. And as you guys know, listeners of this show know that I'm a Bitcoiner. I have almost all the money I have is in Bitcoin. It's very valuable, and I think it's time that we talked about it. I think it's time to get serious about Bitcoin. So we have a special episode for you guys, a Bitcoin episode, but we also have a guest. This is our first Work Hard guest.
Yeah, it's exciting.
Yes.
Groundbreaking.
The guest is my dad.
Say hello.
Hello.
We're working on 2 mics for 3 people, so we might have some delay in responses here as we try to juggle these around, but
not as much as the news, though, when they go to somebody remotely.
Yeah.
There's the 2-second pause. Hopefully it won't be that bad.
Yeah, hopefully it won't be that bad. But just bear with us. This information, I think, is going to be important. So you guys are going to want to hear it. So please bear with us. Just, be tough and survive the awkwardness. It's going to be good. So Bitcoin. Bitcoin is a big topic. And so I needed some backup to talk about it. My dad is also very invested in Bitcoin, both mentally and physically. So it's a big deal around the house. Often a topic of discussion. He knows probably more than the average bear knows about Bitcoin. So it'll be good talk. So we'll dive right in. We won't even do a
no banter today.
No banter
no
today.
No small talk, no stories.
My gut tells me this is going to go long or has the potential to do that. So we're going to just dive right in. So you guys aren't going to get a cool, fun story or any jokes about Indians or whatever. We're just going into it.
What will we do without
what
stories
will we
about
do
Indians?
Without casual racism? Bitcoin. So I envision this being a little bit more of an episode that preaches towards your crowd, Jason, because my half of the listeners will kind of be
it's
on
a little out
already.
of our ballpark.
Yeah. So we'll aim at you guys. The point of this one, I think, is to, if there's anybody who has doubts about what Bitcoin is, how it works, and its security, I think we're not going to be the ones that like insane experts on cryptographic security that is going to totally lay those to rest. But I think my hope is that you're going to walk away from this at least thinking maybe you should look more into it, into the technology and into how it works. And then also I would like to dig into the kind of the philosophy and the implications of having a technology like Bitcoin around. All of that kind of aimed at helping Jason's side of the aisle come closer to preserving your wealth using the apex predator of all assets. And that's really what this is about. This is about making sure you guys, your labor, your toil is being, you work really hard for the money that you get. And I want you guys to be able to preserve that energy in an asset that is not going to degrade over time.
And since we are financial advisors.
Since this is financial advice.
Yeah. Totally legally and completely.
Yeah, completely. You can no.
That's sarcasm. We're not financial advisors.
Yeah, we're not financial advisors, although that is a funny joke.
Who don't understand.
Yes, that I'm giving financial advice. So we'll start simply. What is Bitcoin? Dad, let's start here with this. What would you, in its nature, by its technical, in a technical sense, what would you describe a Bitcoin as? What would you say it is?
At its simplest form, it's a internet protocol. It's a way of a standardized a method of computers to speak with each other and propagate and communicate data. Maybe the next layer up to kind of think about it in terms of how would you use a protocol in this case to handle financial data. Maybe one of the ways to think about it as a ledger that you store information on that keeps a balance, and then probably, and we can get into all of this in more detail, but probably the next way to think about it, after thinking about like a bank ledger where you have your credits and debits and deposits and withdrawals, that kind of thing, is that it's a distributed way of doing that, meaning that rather than having it in one place, centralized, and a bank or a company or a person responsible for maintaining that ledger, the way that Bitcoin works is that, or really all of the kind of that crypto market, is that they distribute that ledger across literally millions of computers simultaneously, so that there is no single point of control, single point of failure, and it gives that eventually, as it continues to build and gain traction, fortifies it, makes it more secure, makes it more accessible, and probably most importantly, it can't be centrally controlled or manipulated by any one group or set of people.
Yeah. Jason, does that make sense?
Somewhat. There's a... So does that, can we differentiate then? He says it's non-controllable. There's no central... So basically, if a server farm or somebody's computer crashes, it's not going to make your Bitcoin disappear, like as if your physical wallet burned up, the cash inside it would not be gone. The Bitcoin will be accessible to you,
right,
from a different point.
Right, exactly. Yeah, you can recover it.
Okay.
In the same way you might recover like a password. So
okay.
One of the things I think that's like a fundamental aspect of the Bitcoin idea is that you have this thing called the wallet, and the wallet, I think, using the term wallet, I mean, it's a good term, but I think it kind of misconstrues what a wallet is in the sense of in Bitcoin or in crypto in general. A wallet is basically, it's a long string of numbers.
In the sense, the Bitcoin wallet is? Right,
the Bitcoin wallet is. And so you don't...
To be clear, there is a physical wallet or no?
Well, so you can get these things called hardware wallets.
Okay, I think that's what I have heard of.
Yeah.
So the hardware wallet.
And it's basically like, Dad, back me up here, because this is where I'm going to start getting a little messed up, is that the hardware wallet stores that. So there's, see, here we go.
Hey, could I offer a suggestion?
Yes.
Why don't we, if we maybe back up a little bit, because we've already jumped way down into some,
right, and this is exactly weeds. This is
first of all, maybe it might help to maybe tell a little bit of my story about how I kind of got into it.
Yeah.
So when now this may not resonate with your entire audience, but when I think it was 2020, around when the COVID pandemic, air quotes, kind of was in full swing. I was going through a pretty stressful time around that and all the extenuating circumstances and politics and and things that were going on, and cancel culture, and things were getting kind of shut down and closed down, and I was starting to feel very
People were losing their bank accounts.
very nervous about, oh my gosh, this where is this headed? And I was feeling very vulnerable, and not really feeling like I had any place to find some solid footing, financially, socially, career-wise. I didn't know where this thing felt like it was unraveling, and I didn't know where it was going. And we aren't rich, but I do have some assets, and it felt like, and then this, with all the money printing that was going on, and inflation that we were kind of staring down the barrel of, I just felt a little bit hopeless. And I have my background for the last number of years is kind of related in this realm, because I've been in internet and network information security for about 25 years. And one of the fundamental components in that world, in the internet world, is encryption. And I learned about and was educated in encryption technology, asymmetric, public key, private key, PKI kind of encryption. Back in 1998, that's was my first exposure to it, and then I worked in it for a while. So you don't need to know all that stuff to understand this, but I'm just trying to give you some background on why I what I came across first in 2020 when I was just like panicked. Was I started seeing information about blockchain. Now, of course, my brother-in-law Wayne, your Uncle Wayne, he came to me, years before that, was talking about Bitcoin, and I was like everybody else, like whatever, just internet fake monopoly money, who cares? And didn't take it seriously. Didn't understand it. And then we started what I came across, we started seeing things about this technology called blockchain. And it piqued my interest. I kind of understood some of the principles that were involved in it. So I started kind of going down that rabbit hole. And once I started understanding how blockchain works, and that's really what Bitcoin is built on, and it's a kind of internet computer protocol. All protocol is a fancy word for a standard. It's just a protocol is just nothing more than a way to have one computer talk to another computer about a certain kind of thing, and everybody agrees. It's a standard. It's just the way we all agree, kind of like the English language is a standard. Math is a standard. There's just these standards that we all agree on, and that's how we communicate with each other, because we've agreed on, the word stop means, halt, and we understand it. And that's all a protocol is just a written out standard of how things are going to be communicated. And then everybody agrees on it, and we standardize on it. So that's how the internet works. Those are all standards and that kind of thing. And blockchain is a way to communicate that is it's highly distributed and has some characteristics that make it immutable and changeable. Everybody can trust it. It's what's referred to as like a permissionless or trustless communication protocol, meaning that I don't have to trust you. You don't have to trust me. I don't even have to know you to be able to communicate with it, but we can rely on it to be true and factual and immutable, meaning you can't change it, can't mess with it, can't hack it. And then there's some other things that are kind of, and we talk about that in a minute, but there's some other things that layer into that give that actual strength. And that's where, the whole mining process gets involved, and how that protocol is actually secured with energy, which is really important. So that's kind of the blockchain thing. And then, so as I started understanding, this blockchain thing is really helpful, a place that we can all find truth. Then I started understanding the value of internet money, or this thing called Bitcoin, and why it would be something that would be of value in an environment that people were having their bank accounts frozen, because unlike Bitcoin, where because Bitcoin is not centralized. There's no single bank or company or person that runs it, owns it. There's no board of directors over it. Then there's nobody that can grab it and control it. No one person.
Yeah.
And so that gave me a sense of like, here's a place where a political body, a government, sovereign, a company, they won't have control over it. So they can't dictate to me or you or anybody else how we use it, what's in it, and they can't get control of it. I can put my assets in it and they can't get to it.
Right.
So I'll pause there.
Yeah.
What question on that? So that's all well and good. And my question then off of that is, in the scenario that the government or whoever, the banks, do freeze up everything that they have access to, what is the route for getting? Is the route that Bitcoin is what we transact with in that kind of horrible scenario where dollars are inaccessible, bank accounts are all frozen? How do you get Bitcoin out again and translate it into something you can use? Because most vendors now, on a day-to-day, you can't go to the grocery store, in other words, and buy food with Bitcoin.
Yeah.
Or am I right? At least currently.
Right.
And I'm not saying, so perhaps it would be a very brief thing. I don't know what that would look like, how long it would take to all of a sudden vendors do start taking Bitcoin because all banks are shut down. And granted, that's a apocalyptic kind of situation, but
Yeah.
it's great that nobody can take it, but can they freeze any way of you getting it out and actually using it to buy food for your family? What routes, how does it now translate into something I can use anywhere as opposed to select vendors? I know there are places you can buy things with Bitcoin, but that's still not the majority, or at least I don't see that, obviously. You can correct me if I'm wrong, but
no, you're right. So this is where it starts to get a little bit complicated, and you kind of have to point out a few things along the way to, I think, reassure yourself and others how human behavior comes into play. Things like, if you're familiar with something called game theory, and because it's self-preservation, but my self-preservation, in this case, I'm going to jump forward real for a second and point out that game theory, that self-preservation, that's really grown tremendously around Bitcoin in the last couple of years, meaning that companies like BlackRock, Fidelity, others now have made massive investments into this Bitcoin environment. And if someone tries to mess with it, like, for example, what you're referring to are what we call on-ramps and off-ramps. Okay. Today, predominantly in the U.S., the way that most people look at Bitcoin is more of a commodity or an asset like gold, where you take and you save in it. You're not trying to spend it every day. You're just trying to store the value of the money that you've earned somewhere that's not going to lose value. And meaning that our currency is continually, daily being debased. They print more of it, and the value of the U.S. dollar is going down daily. And so if you try to save in U.S. dollars, that's a losing proposition. You will, over time, each year you're going to be losing 10, 15%. It's called the hurdle rate. And you're going to be losing that much value. If you've just got cash sitting in the bank, you're going to be losing about 15% of it, 14% of it, the value of it a year. So you need to get it somewhere else. And that's why everybody's investing. They're trying to buy stocks. They're trying to buy bonds. People are out here, trying to flip houses, buying collectible cars. And, they're trying to put their money somewhere other than in cash, because cash, we all experience it over the last couple of years. Going to the grocery store, what used to cost us, $50 now costs us $100 to get the same amount of groceries. We're losing value. So, I and everyone else that's kind of in the Bitcoin world, we're really just trying to find a place to put our money so it doesn't lose value. But you're right. At some point, we want to be able to get that value back out. How do we do that? And are we going to have governments, banks, and things like that shutting down and blocking us from that ability to be able to get access to the value that's in that Bitcoin. Well, 10 years ago, that risk level, very high, because it was a very relatively small community of crypto people that were early stage in this process, and it was very cumbersome to be able to get access to even getting the Bitcoin, storing the Bitcoin, keeping it safe. That was a very complicated process. Today, if you want exposure to Bitcoin, you can simply go into your Fidelity account or any number of accounts in these investment firms that you hold your 401k in, and you buy what's called an ETF, and that will give you exposure to Bitcoin. You don't actually own the Bitcoin itself at that point, but at least you're getting exposure to the returns that you can get out of holding that. So back to the whole game theory and self-preservation. So Bitcoin, like gold or anything else, its value is only there because we believe it's of value.
Yeah.
The second that starts to change, its value will plummet. It'll drop. If people don't see that their energy, their money, their whatever, what their life savings, we call it saving in money, Bitcoin, you can call it money, you can call it whatever you want. But basically it's a store of the value of the work you've put into, generating income for yourself. The second that becomes questionable, we can't rely on Bitcoin anymore because somebody's doing something nefarious, the value of it will drop. So now individuals like you and me, we can own Bitcoin very safely and know that it's very, very safe and protected from nefarious acts like sovereigns, and even China's banned it 5 times.
Yeah, they banned it, unbanned it. They're about to unban it again. They just banned it. Yeah.
Yeah. Many countries have banned it, and but you can't get rid of it. You can't kill it. It's because it's on all these networks and computers around the world. You can't kill it. So it's going to be there, and everybody's going to find a way to get to it, to put their value in it and store it there. And there's so many ways to get around governments to access it. Now, you can't necessarily, if it's banned in China, you're going to have a hard time running down and buy a loaf of bread with it. But it's still offshore, and you can still it's still there, and you still got your value in it. Other countries are using it. And now big companies and sovereigns, companies like MicroStrategy, there's even rumors that Dell has a big stockpile of it. I mean, now it's just becoming more and more and more prevalent. Every day there's announcements of large corporations, sovereigns, pension funds, things like that are starting to put 1, 2, 3% of their wealth into Bitcoin, and that's why you're seeing the price jump so much right now. And now with Trump taking office in January, and his plans to potentially build a strategic reserve using Bitcoin. And then other countries are going to want to do the same thing. So they're not going to want to see the value that they have stored in Bitcoin go anywhere. They want to see it go up, and they're going to protect it. So they're not going to let the use cases for it, the way that we would build some on-ramps and off-ramps, meaning exchanges, whether it's an exchange where you might go put your US dollars in like a Fidelity, and then have that, then go buy some Bitcoin or ETFs. That's an on-ramp, off-ramp kind of scenario. There's a lot of little companies, I won't mention their names because you wouldn't recognize who they are, but companies like Strike, who are working on what's called, it's called a layer 2, because Bitcoin, if you call that layer 1, that's where you store the value.
Yeah, the Bitcoin's blockchain itself is layer 1.
Yeah.
And then they'll build other blockchains on top of that interact with the layer 1. Strike is a very simple version of that, which is that you would basically say, Jason, I'm going to send you a Bitcoin today. You're going to send me 7 other people are going to have transactions that are very similar to that. Then Strike is going to go through, and they're going to do all those transactions in the Strike application, and then at the end of the day, Strike is going to go onto the Bitcoin network and resolve those transactions. Does that make sense?
Yeah.
So it's not directly on the Bitcoin layer.
Okay, so who is it then that actually owns level 1?
No one.
Or layer 1?
Nobody.
Okay, well then my question is, I go and spend $1,000 and invest in Bitcoin. Is it possible for me as a regular citizen to actually invest in level 1 stuff or not?
Yes.
So
And I guess, where does that money go then? My $1,000, who ends up with that if it's this decentralized, no one has control over it? My understanding, there's a limited number of Bitcoins, right?
Yep.
They are being mined, but there's a cap on them. They're being mined at a steady rate, correct? A steady rate?
It's kind of. So
Kind of.
It's relatively steady. It reduces every 4 years
Okay.
by half,
But
by half of the current rate. So every 4 years it goes down by half of the
Okay,
current
so
rate.
they're slowing it down, but it will eventually.
it's about 400 a day right now.
About 400 a day right now?
Yeah,
Okay,
it'll-
but it will eventually resolve and there will be no more Bitcoins.
That
And
is
at some point, there will be a
2035, I think, is the...
I think it'll be 2040s.
Okay.
in the 2040s.
Yeah,
Okay, so in the 2040s or so, there will be no more Bitcoins being mined. That'll be the total in existence for all of time,
Right.
as long as Bitcoin and anything else exists.
Yeah.
So there will be a set number of them. No inflation can touch it.
Right.
It would only be its perceived value, which would fluctuate its rate if it's still an asset and not an actual currency.
Right. Right.
So my question is then, where does my $1,000 go? If I'm buying, or my 90,000, let's say I buy one Bitcoin, it's about 90,000 right now, right?
Yes.
Okay, so I buy $90,000 worth of Bitcoin, layer 1. Where does that money go? It goes, obviously it translates digitally. I bring in $90,000 cash. It goes into some system. And where does that end up? Where does it go?
Yeah, it's like buying a car. So it'll like whoever owns it at the time. It's whoever you buy it from. That's where the money goes.
Okay, so does that mean since there is only a limited number of Bitcoin, not like a company, well, I suppose maybe this just plays into stocks in general. There's a limited number of stocks. But when I've bought stocks, have never been told, I'm sorry, we're all out of stocks for that company. Does that just mean there's enough that there are some Bitcoins that are not owned by anybody currently? And so is there like a back stock of them, or am I buying it away from somebody who happens to, or am I just waiting in line and the next person who sells some, that's where it comes from? Is that what happens?
Basically, yeah.
Okay, so, all right. So my money is really just going to someone else who is taking an off-ramp for Bitcoin. It's not going to, that money is not being stored anywhere. It's going to someone else's and being liquidated somewhere else. Is that correct?
Right. So keep in mind, Bitcoin, again, go back to the original concept. It's just a ledger. It's just a ledger. It's just an entry in a ledger, right? Credits and debits, right? Okay. So that's all. It's a digital ledger that is stored on a million different computers, and it's always validating and confirming that the ledger is accurate all the time, 24/7, and are using this thing called hash rate to verify everything. So all you're doing is, in a case of, so the original owners of every Bitcoin are miners. They mine it. They solve these complex mathematical problems, which take a lot of energy. And that's where you start getting into this notion of what's called proof of work, which is what secures the network. And all miners, whether it's a guy sitting in his house with one computer just ticking away, he's got his computer mining, or massive data center that's just churning like crazy, those are miners. They're the ones that actually solve these math problems, and then they kind of win the awards, which are these Bitcoins, and then they sell them.
Okay.
That's how they make money.
Yeah, that makes sense. Okay.
Yeah, and then once they're sold and they're out into the market, now people are just, today I want US dollars. Here, I'll put my Bitcoins out and these exchanges, wherever you sell them, they're just an auction. That's all it really is. It's just whoever's the highest bidder, right, gets the coins that are available from whoever's right. And you just basically have a buy and sell, and you match. Okay, I take the US dollars or the Chinese yuan or whatever, and here's your Bitcoin. And all that is the ledger changes. That's all that really happens.
Right.
But
So
that's no different.
There's no actual Bitcoin. Is that you don't. It's not like it's not like when you have a wallet. That wallet is just a name tag on the ledger. And then the ledger just says, so-and-so moved this much Bitcoin, in air quotes, over to this wallet. So this wallet now is positive this much Bitcoin.
Sure. No, that makes sense with the miners. I think that was the missing piece, is that there's somebody who has to bring them into existence and then automatically sells them.
Yeah. And
then it's just a matter of changing hands. The digital ledger is changing hands and recording how much you quote unquote have.
Right. One I think now's a good time to make a little caveat, and then we'll get back on track, which is that when you're talking about selling Bitcoin and like, oh, sorry, we're all out of Bitcoin. You don't have to buy
fresh out of Bitcoin.
Yeah, fresh out of Bitcoin. You don't have to buy a whole Bitcoin, right? They break down,
just like with stocks, they break down.
They break down into, is it thousandths or millions?
100 million Satoshis.
Yeah, 100 million Satoshis per
coin.
Per Bitcoin.
Okay.
So 0.000000001, something like that, somewhere in there. And there are going to be total. There's going to be some quadrillion.
2.1 quadrillion
Satoshis.
Satoshis.
Yeah, 2.1 quadrillion Satoshis. So
that's the increment that you buy them in.
Satoshis. Satoshis.
Does that term exist anywhere else, or was that
it's
coined
the name?
with Bitcoin?
It's the name of the mysterious man who invented.
Oh, that's
Bitcoin.
okay.
His name is Satoshi Nakamoto, or their name, the name they used, whoever it was.
Yeah.
Satoshi Nakamoto. Yeah.
Moniker, maybe.
Yeah, something like that. So it's not going to run out. We're not going to run out.
Just for interest in lore, doesn't he still have a Bitcoin? That just hasn't been
touched?
He
has a lot.
But it's untouched, right? It hasn't moved.
Yeah, it hasn't moved.
In 15 years, never
silent.
heard from him. Went silent, went dark.
Mm-hmm.
It's pretty cool.
It is pretty cool. Nobody knows who he is. Yeah. And it's worth, how much is his wallet worth now? Billions, right?
I think it's 2 million Bitcoin or something like that. 1 million. It's a large number that he mined right out of the beginning, and then it just disappeared.
Yeah. So a lot of people think he's dead, because how could you possibly exercise the restraint to not touch that? So yeah, I just wanted to make that quick caveat to let everybody, because that's a question I hear a lot is, like,
that brings to mind another question then. So somebody owning Bitcoin dies and nobody has access to it. Is it possible then that Bitcoin would reduce in numbers and create, just like if you could put a bunch of gold and detonate a nuke in it, it's eliminated that wealth.
Yeah, it's gone.
So it is possible then for Bitcoin to deflate then as opposed to inflate.
Right.
Okay.
Yeah.
So theoretically, 1,000 years in the future, we could have a shortage of Bitcoin.
It's just the amount that a Satoshi is worth would just increase.
Sure, but to the point where some people wouldn't be able to even achieve any.
That's going to happen soon. Like, not soon, but like that's going to happen not in 1,000 years. People are going to get priced out of their ability to get access to Bitcoin.
Right.
Yeah.
And I'm sure there's theories as to will they. I assume it's impossible to break it down because the rules have been set. It's impossible to break that down, or can that be changed so that they could, like stock companies do or public companies do, break their stock into, now you own 10 own 10 of them instead of one of them because we need to lower the price and allow more people to buy into it. Is that something that can happen with Bitcoin, or is that out of the run-ins?
No, it is there is the future ability, if needed, to make it is always more divisible. Okay. Now the size of the pie doesn't change. Right. But the sizes of the pieces of the pie.
Yes.
Yeah. Right. So your value stays consistent, but the way the denomination of it can be broken down further and further. So it can be used, infinitely for whatever quantity of users there are out there that want to continue to use it.
Be trillions of pieces, 1 trillionth of a piece.
Yeah, and that trillionth could,
go down to another trillionth. Yeah. So it's a very robust, and I do want to circle back real quick to the government issue, just to make one point, which is that this water, as well as anybody, water will get in somehow, and you have to think about this like water. It's inevitable. So even if a government tries to ban it, like they did in China, they banned it, but it was anybody in their house could get access to Bitcoin with a software called a VPN, which is a extremely easy little thing to use. You turn it on and it spoofs an IP address from a different location. So these exchanges thought,
like how you watch movies, like how you would watch movies that aren't available in your country.
right, exactly. Yeah. Same thing. Very, very simple solution. Super easy to use. And now,
so in order to actually effectively ban it, you would have to somehow eliminate or ban that technology.
You'd
go house to house.
Immediately a new technology would arise.
Yes.
That would take a week, and everyone would have figured out a new way to do it.
Yeah.
The
water would get in.
Yeah, the water would get in. The only hope that you have. Oh no.
You have to.
Yeah, it gets poison ivy.
You basically have to shut off the power or shut off the internet.
Right. You have to revert the population back to like the Stone Age in order to stop it. And so that's a thing that's really important. And the game theory argument is, I think, foolproof in that by the time governments actually view Bitcoin as a legitimate threat that is worth attacking, they will already own so much of it that attacking it would be detrimental to them. And so they won't attack it. Now that's still a theory, right? We'll have to see if that plays out. The argument that I would make that's like a hard argument is that, like, in communist Russia, black markets existed everywhere.
You can get shortwave radio programs in North Korea that are outlawed.
Right. Yeah. There's
just not ways.
Yeah. It's not possible to actually stop this thing from occurring. And it's just, and this thing, I don't mean Bitcoin. I mean like market forces. They're just, I've started to make this argument everywhere, and I think I'm going to make it harder all the time, which is that people really need to see like technological advancement and market forces as natural forces of nature. That you can kind of manipulate them a little bit as a human race, and we've seen that it's been, with the Fed and stuff like that, they've manipulated markets a little bit, but for the most part, you cannot stop these things. Market forces, it's like a hurricane. It's just the best thing you can do is either batten down the hatches or try to harness its power for your own gain, but you can't stop it. And so that's the thing that I would say is important with Bitcoin, is that it's a Pandora's box technology. Once it's invented, you can't uninvent it, and there's no stopping it. It's like nukes. It's like anything else. You can't. Once it's here, it's over. There's no going back, and it just snowballs, and eventually the entire planet becomes so invested in its health that the only game to be played at that point is trying to get Bitcoin from people. So the governments may try to find some way to get Bitcoin from you, but if they find some way to actually compromise the network or really force you to give them Bitcoin, then it loses its value, because it's a big value statement is that it's immutable and unhackable and nobody can touch it. So if you do figure out some way to steal someone's Bitcoin, you render the network useless and thus make Bitcoin worthless. So it's actually not good to try to steal it, because you will then make the Bitcoin that you just put all this effort into stealing worthless. And now it's just not. So that's a reason why it's like people get so excited about it, is because it's the first technology that's really like that like really taps into this idea that the only way to compromise it, or by compromising it at all, you render it useless. Thus, if you are motivated to get it, you are incentivized to get it honestly. And Charlie Munger has a really famous quote. Charlie Munger is Warren Buffett's investment partner. He has a quote that's show me the incentive and I'll show you the outcome. And so everybody's incentivized to keep Bitcoin healthy. And so everyone, like, that's another reason why people make this. Actually, you know what? I'm not going to go down that. That's a little bit of a rabbit hole. We can get into it a little bit. It's a little bit further down the line. But yeah, so I just wanted to kind of hit the I guess it's still a game theory argument, but just kind of make the market forces as nature argument. So where are we at? Where are we at now? We've talked about, what questions do you have, Jason? Do you have any off the top of your head?
Well, how about we switch it up a little bit and talk about, there's lots of other cryptocurrencies.
Yep.
Is Bitcoin a cryptocurrency? And if it's not, how does it differ from things like Dogecoin and other stuff like that?
Yeah. Yeah. So, Dad, you want to take that? Because I would say that there's one, and maybe you do know more. You can speak to this better, but I would say that proof of work is the one thing that differentiates Bitcoin from everything else. And Dad, you'll be able to explain that proof of work way better than I will.
Yeah. So Bitcoin was, as far as we know, as far as I know, but I believe it was the original cryptocurrency, and then everything else came afterwards. And Satoshi and the folks that he worked with that created Bitcoin, they were very smart, obviously, in how they went about doing it. And one of the key components that Ethan was referring to is called this notion of proof of work. That's the way that I think most cryptos may have started. At this point, I don't think most of them adhere to that notion at all. But proof of work is it's a high mountain to climb. It's a hard standard to maintain, and that's what drives the value and the security of the Bitcoin network. There are other standards like proof of I forget what the rest of them are called, but Ethereum uses proof of stake, I think, proof of stake, and some other methods. But they're less intensive, and they're easier to hack, and they're by their nature centralized.
Okay. All right.
And so Bitcoin's kind of in a category all its own. Just to make that clear, there's Bitcoin, and then there's all the rest. And Bitcoin adheres stringently to a proof of work model, and we can talk more about what that is. But and then the rest of them are not, and so they're
is
just
that because others weren't able to replicate that, or is it just a desire to create something new? Do you think?
Yeah. So
the other cryptos,
the rest of the cryptos, you kind of think about the rest of them as like just high tech firms. They have all these more complex, I guess you could call it, use cases, like being able to create contracts between one person and another, or a company and another company. They're different use cases than storing value and being something like a currency. So that's the easiest way I think to understand them is basically all the other cryptocurrencies are, you can think about all of them like Ethereum, Solana, Sui, you go down Polkadot, all of them. Just think about them as just a software company, high tech company, and they have a token.
Yeah.
And the token really is more or less just kind of like a share of stock.
Yeah.
And they can print more of them, take more of them away. They have boards, they have, CEOs, they have a lot of decision makers. It's not a distributed, they use blockchain, but there's public and private blockchain. So Bitcoin is a public blockchain. Nobody owns it. It's a protocol everybody's communicating over. But then there's private blockchains, and those have been around for a while. And but those are they are distributed, and they offer some of that protection that comes along with distributing a ledger like that. But they're still heavily centralized in terms of who dictates what's in the code and that kind of thing. And you don't have to have total agreement. Anyway, there's just they're just much more. All of them have either been hacked. Bitcoin's the only one that's never been hacked, never brought down. Nothing's ever happened to it. That's why it's so trustable. The rest of them can all have problems, just because they're just really just high tech companies, software companies with shares of their stock called tokens, which are what you're buying Ethereum on the network.
Okay, is there a layman's way of explaining why Bitcoin is so untouchable, so unhackable? I guess let's say there's somebody, a joker like person who just wants to burn the whole thing down. They don't care about stealing it, so they're not motivated by obtaining Bitcoin, like you were talking about.
They just want to see fire.
They just want to they want to destroy it for whatever reasons.
Right.
A malevolent person.
A country, the United States, who doesn't want their currency threatened. An example of probably the single biggest an entity that could try to bring something like Bitcoin down. They don't like China or the U.S. government or a country that has their own currency, like United States, for example, and it's a currency that's used around the world, and the U.S. government does not want to have the threat of another currency, replacing the U.S. dollar as the world's standard form of monetary, accountability, accounting, and transacting. And so that's an entity that doesn't have their reasons for maybe wanting to just burn it down. That's different than somebody trying to hack it to get the value out of it, and then having it lose value. Well, if the U.S. government doesn't care if it loses value, like to your point, how would they do that? So, or would they do that? And is Bitcoin vulnerable to that? Bitcoin is kind of past that point at this stage, because the amount of computing power, and meaning actual processing power, it's called hash rate, and the amount of electricity it would take to overwhelm, because the only way you can do it is you have to be able to overwhelm all of those what are referred to as nodes on the network. You have to be able to overwhelm them. It's referred to as a 51% attack. And to do that, you have to have 51%, the majority, of the hash rate on the network, meaning that you have the ability all on your own to take control of the blockchain, meaning that you have the blockchain works under this notion of what's called consensus, meaning that at least 51%, more than that on a day-to-day basis, it's 100%, but there's consensus among all the nodes, all the millions of nodes around the world, that this piece of information is X is X. That's consensus. Once it reaches consensus, it's locked into the blockchain. It can never be changed. It's immutable. It's secure. Once that consensus is met, and so they're all validating each other. So how do you hack it? Well, if you can get 51% of the entire network's hash rate, then you own consensus at that point. You can then tell it, the rest of the network, whatever you want, because you've now overwhelmed the network. Well, years ago, it was conceivable that you could get enough literal energy, power from the network, from the grid, because there were only small miners and small, folks involved, and not that many of them. And so it wouldn't take that much, but it wasn't worth anything back then. Today, I think Michael Saylor was quoted recently, in the last couple of years, as saying that it would require the entire power of the U.S. Navy all at once, and it has to be sustained. You might get it for a second, but as soon as you can't sustain it, you've lost control of it again.
How long would you have to? Do you know how long it would have to be sustained for? Just out of curiosity.
Indefinitely.
Oh, indefinitely.
Yeah, I mean, because as soon as you don't have the majority of the consensus and the hash rate, then it can revert back, and then you no longer can have control of it. And so the consensus it would again revert back to now. It's been, while you had control of it, you've probably already destroyed it at that point, and people have lost value in it, and you would burn it down. But the point is that the only way to, as long as the network is there, whoever the consensus, as long as it's in place and operating as expected, then you can trust everything that's on there. But as soon as it tips over to one group, but it's physically impossible. And to be able to try to do that today, there is no single country or group or even groups of groups that can even do it at this point, because they'd have to buy up all of NVIDIA and all of the processing power for the next 2 years and have it all delivered at once, and harness all the electricity all at once, and then sustain the attack long enough to just overwhelm the network and quote unquote bring it down. It'd still be there, but they would just nobody would trust it anymore, and it would lose. People would just start dumping it.
Right. Okay.
So so it's just not. It's not possible. The only way that the only exposure that or the only thing it's exposed to now are, countries banning it and regulation that says it's illegal or making it difficult, the on ramps, off ramps. But all that's gone away too now, and it's even going to get even now that the U.S. government and Trump's coming into office. The reason we're talking about this today is because that's tipped at this point to. There's really the risk at this point has shifted. The risk for the last 15 years to one extent or another, years ago, 10 years ago, the risk of owning Bitcoin much higher. The risk has come down. Now it's flipped. The risk that you run today is not having any. By not having any, you're at risk. You're at risk of losing the value of your energy, and the hard work you're doing. It's being evaporated every single day because our government, the only way to get themselves out of $36 trillion in debt is to print. And that's what they're going to do. They don't have any other choice. That means it's going to debase the currency. That means every dollar that you're making, they're incredibly good at maintaining just below hyperinflation, being able to keep keep it from just going off and tilting. And so they can drag this out forever. And the only way you can protect yourself is you've got to get out of U.S. dollars, saving in some kind of asset. And the best performing, most secure asset in the world to do it with is Bitcoin.
Yeah. And another thing that's important to say is that there's the inflation aspect of it that generates risk. But also as that risk profile increases, as it gets more and more risky to not own Bitcoin, more and more people are going to remove their wealth, their energy from whatever asset that they have it in now and put it into Bitcoin.
Right. Okay. So stocks, gold, silver are going to go down.
Right. And cash, the value of cash will go down also because people are going to stop holding cash more and more and more, which means there's going to be more of it in the market, which means it's going to be worth less. So it's very important, and that's part of the reason why I wanted to have this episode, is because it's very important to address this now, because every day you don't address it, more people will be leaving these assets and going into Bitcoin, which means those assets are going to depreciate in value and Bitcoin's going to increase in value. So if your energy is stored in these other assets, that energy, that wealth is going to evaporate just by the passive process of people selling that asset off into the market. So it's a double-sided, or it's exponential in its risk increase. Even though
it's tremendously more expensive since Trump got elected, a huge jump, it's still worth getting into it because it's going to be the thing that's solid. Yeah,
not only is it worth getting
obviously into, you'll buy less. What was the word again? What pieces? What are the pieces called?
Oh, Satoshis.
So you're going to be able to afford less Satoshis, but theoretically that's going to continue increasing as long as everything continues on the path that we
And one of the things that's important is that thinking about it in terms of, my money's going to buy me less Bitcoin, so I shouldn't buy it, that's a facile way of thinking about it.
Right.
What you need to be thinking about is that I have $20,000.
You're preserving the $20,000.
I want the $20,000
to still buy me $20,000 worth of crap.
Right. Exactly.
All right. Well, you've convinced me. I'm officially terrified. How do I buy Bitcoin? What's your favorite route, I suppose? What would be a recommended beginner easy access route?
So let me say one quick thing is that the simplest thing before we talk about how you go and buy it is I think the way most people want to think about it, if you get past all the tech stuff that we just talked about, is that you want to save in Bitcoin now instead of saving in a CD or in your bank in a savings account or money market account. Those are not going to keep up with the debasement. So the debasements, real terms is probably somewhere in that 12, 13, 14% a year. And so unless you're getting 14, 15% returns on something, then you're not keeping up and you're falling behind. So think in terms of just saving in Bitcoin. Then on the upside, it's also far better than that because it's actually very deflationary. The price of everything is going down relative to Bitcoin. And so things are getting cheaper. If you have Bitcoin, the price of bread, the price of gas, the price of everything is actually going down, not up. And that's the way that real money works is deflationary. We're just so conditioned after hundreds of years of fiat currencies and inflation and debasement that we just think inflation is normal, and it's not. Things should be going down to just roughly the cost of producing something, and that always goes down. Yeah. That's why TVs and things like that, with that inflation adjusted, are actually, they cost less now. So anyway, think about it in terms of saving and then investing, for the future, and you are getting much higher returns out of Bitcoin. Even if you look at it through that lens of like, oh, well, if I can buy Nvidia stock, or I can buy Tesla stock, or I can buy this house and rent it out, nothing outperforms Bitcoin. So if you want to take it a step further and think about it in terms of well, I want to get even a better return on my money, should I be putting it in Bitcoin or buying a house and renting it out? When you start looking at all the overhead associated with almost anything, owning a business, and then you start factoring in taxes and all the costs that are associated with trying to run and own a business. Not that you shouldn't go and own and run a business, you should, but if you're looking at purely return on investment, on average, Bitcoin is about 45% a year right now,
which is absurd.
Yeah.
Was that 3 times the best years on the stock market, maybe?
Mm-hmm.
Yeah.
So it's the highest performing asset in the world. Now there are individual stocks, like MicroStrategies that's doing even better, and but those
for a little while.
Yeah, for a little while.
But not sustained. Right.
So if you want to buy Bitcoin, you can start in a lot of places. I'll start with this notion of what's fondly referred to as not your keys, not your coin. Meaning that the way that the ledger is at the layer one, rudiment, the base layer interactions with that blockchain called Bitcoin is done through a set of keys, and you own the keys. And then you have a key that allows people to send you money and transact with you, and then you've got a key that only you have, that you can actually unlock it and get the funds out. And that's an address on that blockchain network is used. Those keys have access to that. There are a number of exchanges out there like Kraken and others, Coinbase, others that you can interact with using your keys directly, so that you can, quote unquote, physical. I mean, this is obviously a virtual digital thing that we're working with, but in terms of understanding kind of how you transact with it, you can take US dollars and go to these exchanges like Coinbase. That's probably the biggest one, and Kraken and others. And you transfer your US dollars and you put them into a bank account that holds that money, just like it's FDIC insured. It's a bank account, just like your bank account that you probably have that you keep your paycheck in, and it's just a brokerage account, but instead of Fidelity, it's at one of these that specializes in crypto, Coinbase. And so you deposit money into those accounts, and then then you go on your online account there and you go, okay, I want to go buy some Bitcoin. And he goes out and buys Bitcoin for you. And now you've got Bitcoin in your account in that exchange, and you can leave it there. And they have a fiduciary responsibility to make sure that it's secure and safe and it's regulated and all that great stuff. And you can leave your Bitcoin sitting there on that exchange indefinitely.
So with those, that would be like a second layer?
Yes.
Those folks would be second layer.
Yeah, that's a good way to think
So
about it.
you say they're insured. Does that mean that if someone was able to is it possible for somebody to hack that second layer?
Well,
as opposed to, I know the top, we already talked about the security of layer 1 blockchain.
If they mishandled their private keys, which would give someone access to those wallets, that's basically how they would get quote unquote hacked. Right. Is that they're going to have somewhere in their databases somewhere, they're going to have their private keys. And then if that storage system gets hacked, right, which is not the Bitcoin network, it would be a totally separate thing.
I understand. That's what I'm saying. So we already covered the security of the layer 1s, but layer 2s, if they get vulnerable are they, and if they do get hacked, how do you get that back? Are they required by law?
Coinbase, they're required by law to have all that be insured.
Okay, well, so that's a perfect segue to where you're going next with this, and that's why I was mentioning the keys earlier. Okay, so the ones that not your keys, not your coin. Yeah. Okay. The first step is, remember I mentioned that you're going to do a wire transfer from your current bank over to Coinbase. But to do that, you look at the paperwork, it's actually going from your bank to their bank. Now it's in US dollars, it's just sitting there in that bank account. And then you give them instruction, either online or you can call them or whatever. And you say, okay, buy Bitcoin. Now they're going to take that US dollar out of that account and they're going to go onto the market and they're going to the auction and they're going to buy the Bitcoin. And then they're going to take that, and what's going to happen is that US dollar is going to go out the door again, go to somebody else, and then the Bitcoin ledger is going to change, and now it's going to go to a set of keys, that make the address that house the wallet that Bitcoin goes into, right? And if you stop there, in your account at Coinbase, you log into the account, you can go, oh, look, I own a Bitcoin. Or half a Bitcoin, right? It's in your name. It's in your account. Just like Bank of America, your cash there is in an account in your name. But just like the rest of us, there's no money there. No. It's just a ledger with your name on it. Right. Same thing is happening over at Coinbase, is they have Bitcoin on the actual blockchain in the real world, distributed all over the world. That the same things that we talked, all those principles apply. That Bitcoin cannot be hacked, taken out, changed, or done anything with. It's there. But Coinbase holds the keys, not you. Now you have put a intermediary, that's part of what we're trying to avoid, right? Is an intermediary that owns that you just have an account with that's holding your keys, it's holding your Bitcoin, and the federal government can come in and go, hey. Just like they did, what is that called? When they seized gold back in whatever.
I don't remember what the policy was called, but they basically.
It's like a number. Anyway,
hey, Dad, will you grab the mic, like by the actual mic? If you hold it by that's not supposed to wait.
Okay, got it. See, I'm a newbie at this.
Yeah, that's all right.
So those that are really trying to be purists around this, they want to go one step further, and that is, as soon as you tell Coinbase, go buy my Bitcoin, it comes. Now they've got it in an account at Coinbase. What you want to do is fairly quickly is you want to say, okay, I'm going to move it out of that account onto my own key protected ledger entry, and you just basically move it over, and that's where this notion of this wallet, this cold wallet, cold storage, and then you take those keys that only you have access to, and then you protect those, and now nobody has access to that Bitcoin except you, and it can never be taken from you. But if you leave it on the exchange, potentially, it's got your name on it, not your keys, not your coin. If things come, the army can. Yeah, you're gonna have to depend on them to protect it for you and make sure you get it. Yeah, and so that's the way you can. And there's simple ways to, once you take it off of the exchange, now you've got it in your entry in the blockchain that you have complete control over. And then there's additional ways that you can do. You can, that could maybe for a topic for another show. You can make that even more secure. And make it so that it's inheritable by your kids, and people have thought through a lot of these things so that you have what's called a multi-key kind of process that allows you to really, in case you lose something, you use your key, well, you still got a way to still get access to it without it, having to, panic.
Kind of like a backup email, how you recover your
Kind of, yeah.
sort of.
Yeah, it's very it's very ingenious and very thought out, but it's a way to keep it protected without having a single point of failure.
Is there any physical aspect to this at all? I talked in the beginning. There was a hardware. You said cold storage. Does that mean like a external hard drive type of thing that holds that data on it?
Yeah. So it's basically there are different vendors that make these things called like Trezor Wallet and Ledger and others, and those are actual physical little USB kind of devices. But the real magic isn't those. You can take those away and it won't matter. What the real magic, and this is where it's the more you peel back the layers of this, the more ingenious it gets. All that's happening there, when you really get down to it, is there are these cryptographic algorithms that are very, very strong. It would take the biggest computers in the world like 10,000 years to crack this encryption. It's ridiculous. Yeah. The way that it's an algorithm. It's a way to create an encryption key, but the way that it works is you have to feed it something on one end, and the encryption key comes out the other side. The encryption itself is what's so strong that you can't crack the key, but the simplicity of it is all you have to do is feed it something from this side, words, numbers, something that only you know. So what the standard is in the industry is it's either a 12 words or 24 words, and you can memorize them, you can write them down, you can store them in different places, but you feed those 12 words in, you always get the exact same key on the other side, set of keys on the other side.
And that key is the string of numbers, whatever that you actually use to access your account and actually off-ramp your Bitcoin.
It unlocks for you.
Yeah.
You can unlock the blockchain, get money in.
So you can memorize some. That was kind of my thought is, where do I store this password? And if my wallet in my little cold hard drive USB thing gets burnt up in a house fire,
doesn't matter.
Yeah. So does that mean the words would be on so the account would also have the 12 or 24 word? So the account, I log on my computer, get a new laptop because my old one died in a fire.
The algorithm is the same for everybody.
Okay.
Everybody has the same algorithm. It's what you feed into the algorithm, right? So if you have like one of those hardware keys, those wallet things that keep it in, it's in there. If that gets destroyed, you just call a company, hey, send me another one, and then you put your words back into it again, generate your keys again.
Your wallet's
okay,
right there.
I see. So that one is not programmed to you. They're all identical.
Yeah, those are all identical because they just.
And so are they? Here's my level of uneducation about this. Is that a node, or is that
no?
Or maybe explain briefly what the nodes are, or reiterate those.
Yeah.
For my side of the audience.
All a node is just a word that describes a computer on the network.
Okay.
Just any random. It could be a little PC on the floor, or a laptop, anything, because the software is actually pretty small, doesn't require a lot. Just that it's the processing power. It takes a lot of energy and time to crack those, do the mathematics to mine the code, the coins, and that's what it gets down to is the transactions. That's what a node is. It's not the wallet, the little doohickey things. Those are just the physical USB kind of drive thing you have in your hand. It just allows you to generate and store the key that you have to go through the network and to get on the network and unlock the and I'm using terms that aren't technically accurate, but they describe give you an idea of how the process might work.
This is Bitcoin for Dummies, so we appreciate it.
Yeah. Well, that's the weird thing about computer stuff is, we use these words to kind of give you some idea of what's happening there, but like you go on your computer and you go, oh, go look up a file. Well, there's no file, but it gives you something to think about. That kind of
desktop
gives you a picture of something that's there. And it's not really there.
Yeah, it makes it metabolize.
We have to talk in physical terms since that's what we're all familiar with and touch and interact with.
Right. Yeah, you're human, and it has to have a human.
Yeah, digital is a borderline spiritual realm that you have to.
Yeah, that's not a hard. Yeah, it's not a bad way to think about it.
It's very abstract.
So, we're at an hour. So we have a couple options here. One, we can cut it because I feel like this is a good crash course. And one thing I had a thought while I was going potty was, there are a lot of people who are way smarter than us who dig into this stuff in really intricate, very thoughtful ways. So this is not necessarily, I think, this is not designed to be like totally educational as much as it's designed to at least make people, the guys who are listening to this, who are suspicious or doubt its significance, start to go, okay, I need to look into this. Or at least go, okay, now I understand enough about the technology itself that it sounds like it might be actually secure. This may not be just a fugazi internet money. I might actually need to look into this deeper. So that's what this is for. That being said, we have a couple options. We can cut it here and just say that's a quick crash course that everybody can kind of get into, or we can dig into. There's one facet here that I think is important, but not necessarily. What I'm ultimately trying to say, the point I'm ultimately trying to make here with this is that there's this aspect of Bitcoin that's very important called proof of work, that we can talk about, that explains why the Bitcoin network is so secure. There are people out there that can explain proof of work better than I think maybe we could. So I don't necessarily know that that's important for us to do, but we could spend some time talking about it briefly.
I think maybe on a little bit more of a practical, actionable level, I would like maybe a little more clarification on, you were talking about the not your keys, not your coin. So you have Coinbase, you buy it through them. They're a broker basically for you buying Bitcoin, and it's there in your name in an account, but you don't have the ultimate keys to get to it. What is the tertiary layer that you're talking about to where you get it out of Coinbase? Can you buy it directly from layer one, or do you have to go through one of these mediators? No. And also, is it a separate company? Is it a software? Give us maybe some names to start with, or for the audience to look into, to delve a little bit more, because it's a little too abstract to do a really easy. They would have to kind of start the research pretty broad and narrow it down. Yeah.
So you can buy Bitcoin without going through a third party intermediary or an exchange. That is quite a bit more involved and sophisticated and complex, and it's just easier. There's no real need at this point to try to go build a node out yourself and then try to get into the liquidity exchanges. And for somebody that's really interested in doing that, it doesn't really. I think if you were transacting a lot and just wanted to not ever have your Bitcoin have to go through an exchange, and really it's more at that point really you trying to be completely anonymous. So there is no, because if you go through those exchanges, there's KYC, know your customer, and so they're going to know who you are and your transactions. And so if you want to be 100% anonymous, there are ways, and it has been there since the beginning. Definitely ways to go and be able to get Bitcoin without having to go through an exchange. It's just more complicated. On the other end, I would say, depending on who's listening, the simplest thing that might be to do at this stage, just you tend to be more interested in things that you've actually made an investment in, and so one of the simplest, and there's a lot. Takes a lot to absorb. For most people, it took me forever to figure it all out, you'll be much more engaged at trying to figure it out if you've got some skin in the game. And the vastly easiest way to get skin in the game right now is if you have an account at like a Fidelity, a BlackRock, your 401k at work, any place like that, you can literally go within seconds and buy the FBTC, the Fidelity Bitcoin ETF, and it goes right into your account instantly. There's nothing, you don't have to go move money over to Coinbase or Kraken or anything like that. You literally go into an account you already have and just go, I want this ETF, because there's gold ETF. There's all kinds of ETFs out there, right? And you just buy that, and now you've got an investment in Bitcoin. It's not, and it's some, if it goes up, well, it's just going to do, it'll go up. At some point you go, you know what? I really now want to cash out of that ETF and go actually take the money and go actually buy literal Bitcoin and put it in on the blockchain, and you could go there. But a first step might be just go buy an ETF and go watch. That way you got some money and skin in the game. Now you're invested, and now you want to pay attention and start learning.
Yeah. Yeah. The practical advice I'll give you there on that end is there's a company called Swan, and the only thing they do is sell Bitcoin. So you can't sell it. It's not an exchange, in the fact that you're not exchanging Bitcoin back and forth. You can only go there and buy it. And they have a KYC process that you have to go through, but KYC is not hard. It's just, you basically have to send somebody a picture of your driver's license. Takes, maybe 24 hours to get approval for that. So if you do not have access to a Fidelity account or a 401k of any kind, just go to swan.com, set up your account, and then you can just go, and Swan is the best because they only offer very limited services. It's cheap.
Specialized.
Yeah, it's specialized.
That was the another point I wanted to bring up, is any of these secondary guys, any of these mediators are going to have some sort of charge for the transactions,
right?
And security and all that.
Yeah, and Swan has the lowest fees. I think that may have changed, but the last time I bought a significant amount of Bitcoin, Swan had the lowest fees, and that's who I buy Bitcoin through now. I just set up something else that I'll talk about in a second. But so I buy all my Bitcoin through Swan, and they're a great company. Very, very reliable, very secure. And you can just buy the Bitcoin from there, move it off of that account. You can leave it there if you want. I wouldn't recommend it, but you can move it off of that account onto your own wallet. And you don't necessarily even have to have a hardware wallet. You can get...
That's what I wanted to know. What's the next step after that? Getting it out of Swan. What do you need to buy? What do you need? What account do you need to set up? How do you actually go about doing that?
Yeah, you can go to a company called Trezor. That's what I would recommend.
Trezor?
Trezor.
Sorry,
yeah,
spell it for us.
Trezur.
Okay.
Trezor. There's another one out there, another big hardware wallet called Ledger. Ledger, I would not recommend. There's been some controversy around whether or not they actually have programmed a backdoor into your wallet.
Fantastic.
Yeah. So, and I don't remember the details around that because it was like a year ago that came out. But I would just tell you that it's
an option. You don't have to use that version of it.
Yeah, you don't have to, oh, okay. You don't have to use that version of it. Okay. So I would just say Trezor, you don't have to worry about which version you're using, whatever. Just go to Trezor wallet. It is very simple.
They'll
walks
explain
you
it for you on the website.
Step by step, how to
Good.
get it done. And then you can just buy it off of Swan, move it over. That's also super easy. They'll just be like you can watch a YouTube video on it to explain it. It's very, very simple process. It's not hard. Here's what I'll say. There are kind of two ways you can buy Bitcoin, I think. Two ways that are like a good way to buy it. One is to just take a bulk amount of cash and buy a bunch of Bitcoin all at once and just say, there's my Bitcoin. That's kind of an investment strategy, whatever. The way to save, I think, and the way most people should engage in buying Bitcoin is called dollar cost averaging. And that's where you just, it's a kind of it's a way to say you are taking a certain amount of money, the same amount of money every week, every 2 weeks, every month, every day, whatever
percent of your paycheck or a set dollar amount, whatever.
Right. And then you are buying Bitcoin with that. With Swan, with many of these exchanges, Gemini, Swan, Coinbase, they have it set up so you can just go in, you can link your bank account to the account, and then you can tell Swan once every 2 weeks, I want you to pull $150 out of my account and buy Bitcoin with it.
Very nice. Okay.
Yeah. And the dollar cost
hassle-free.
Hassle-free. The dollar cost averaging is
that's the way to watch it stack up.
That's the way to watch it stack up.
And you're not worrying about the price and is this
Right.
the time to buy?
Right, exactly.
You eliminate that anxiety. And
because you get exposure to all these different price points.
Right.
And
so over time, you're going to,
for people who are people who are not professional investors, people who are just regular people
who are using it as a savings account.
Right, who are using
and
it
that's
as
what
a
we're
savings
advocating
account.
here, right?
Right, exactly. Dollar cost averaging outperforms all other ways of buying as far as rate of return goes.
I've listened. It's the same thing for stock market.
Yeah.
That was the advice I heard is like, don't try and time the market.
Right.
Just
little by little,
every paycheck, have a set amount. Don't balk if you're like, oh, it went up. I should wait a week.
Right. Exactly.
Put it in.
Right. Just put it in little by little, and your account will outperform in its total.
Over 20 years, you'll be doing better.
Yeah, you'll be doing better than somebody who's trying to be like, oh, I know what I'm doing here, whatever. The only reason you should be doing that is because you're a professional investor who's either you
spend
have
all your time
150
doing that.
IQ and it's all you do for 24 hours a day, or you're an investment firm that has an army of analysts to help you decide when the best time is to buy, and let those guys play that game
because that's cheaper.
Yeah, exactly. Right, exactly. Yeah, that's cheaper. To pay a hanger of 23-year-olds to help you figure that out. Yeah. So
a hanger of 23-year-olds.
Yeah. So I would that's what I would recommend is dollar cost averaging will have the highest rate of return. You can do it for whatever amount you want at whatever interval you want. And they're like Swan. The thing I don't like about Swan is that it won't let you pick dates. So it's like, I want to buy on the 15th and the 30th of every month. It says like you're going to buy it every 2 weeks.
Oh, it has every certain amount of days.
Yes, it has intervals. Okay. Yeah. But there are other ones that are like, I want to buy 15th and 20th. When you want this? Gemini has another good one. Whatever, it doesn't matter.
Different options.
Yeah, get into the weeds. Yeah. And you can, don't worry too much about like, oh, which exchange do I use? Whatever, like that. Again, optimizing this at this point in your life is not what you're trying to do here. You're
just get exposure.
Just get exposure. 0 Bitcoin is not the right number. Whatever number it is that's for you that you want, 0% of your money in Bitcoin is wrong. That's the only wrong number. 0% of your.
Really quick, maybe a clarification about the ETF thing. Getting exposure is good, but is that anything like buying paper silver is a bad idea? Because there's way more of that than there is of actual silver, and it's potentially worthless.
Yep, similar concept.
How does if you're not actually buying the Bitcoin, what is the ETF actually tracking?
So anytime you venture into a derivative kind of environment, there's always going to be that risk that it gets abused and there's more paper than there is the actual asset. Right now, the regulations require that the ETFs are purchasing the actual Bitcoin and that funny business isn't going on. So we have to depend on, again, other third parties in that case to make sure that they are doing what they say they're doing, and that they have the actual Bitcoin that's backing it up, and they're buying it on a regular basis to make sure it's there. I'll mention one other thing just to frame this for people to be thinking about it the right way. Again, think about it if you're starting off, think about it in terms of a savings method, not trading it, not trying to get into it and get out of it. You need to have 4 or 5 year time horizon kind of expectations. If you don't put $10,000 into it, knowing that you're going to need to pull it back out, in 6 months, because the price fluctuates quite a bit. It's the volatility in it is coming down, but you need the volatility to get the returns that we all like getting out of it. But you have to have them, you need to be able to set it and forget it. Dollar cost average in, or if you lump sum in, whatever, but you just got to know, it may drop in value for a while, and you got to be prepared to let it just sit with it. It'll come back.
Yeah.
Don't panic sell.
Yeah, don't panic sell. Yeah, and the way you don't panic sell is just don't put anything you're not afraid to lose.
And also don't look at it all the time.
Yep, don't look at it all the time. I say I have the background on my phone is a Bitcoin.
Does it show you constantly?
Yeah, look. On my home screen, it's just a Bitcoin chart.
Funny.
So,
okay, that's what that is.
Yeah. Yeah. So.
Well, I think that pretty well wraps up all the questions I had.
Okay.
So definitely that answers all the questions that any of my side of the audience had.
Yeah, of course. That covers everybody.
We're all done.
Yeah, we're all done. Yeah, so guys, if you have any questions, obviously, about this stuff, you can email us at workhard@hyperpremium.co, not .com. I will not receive an email if you get that.
Yes, yeah, so if you're from Belgium, for instance, and you've sent us an email
Yes.
at .com, we haven't gotten it, man.
We haven't gotten it.
We're
Yep.
still waiting to hear from you, bro.
Yes, if you have any questions, you can email us. I would recommend not emailing us on this topic and just looking it up yourself. You're probably going to find better.
True.
Better.
Yeah.
Oh, and that's one point I wanted to make. If you are interested in figuring this out, I would recommend YouTube. You can give yourself a college degree on this stuff in a week on YouTube. Coin Bureau is what I would recommend going. I would look up
That's the channel?
Yeah, Coin Bureau, Bitcoin for beginners. Look up something along those lines. Beginner Coin Bureau, whatever. That
Sure.
guy is really, 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 really good at explaining stuff.
Fantastic.
He's a British guy too, who's kind of delightful. So,
Always fun to listen to.
yeah, always fun to listen to those guys. Coin Bureau, Michael Saylor is a big.
One that I would recommend is it's a little more long form. Is Robert Breedlove's "What Is Money," and he's got a segment, what do you call it? Instant of Michael Saylor. He's got like 9 episodes. Way back in the beginning.
Yeah.
And that really lays the foundation.
Yeah. So Michael Saylor, just to give you a little bit of background, Michael Saylor is the CEO of a company called MicroStrategy, which is one of the first big tech companies. He is insanely intelligent, and he talks like this. Well, listen, the way you got to think about it is he's just kind of a funny guy. So he's fun to listen to, and he breaks stuff down really well. So you can look up anything by Michael Saylor. I actually not anything, because he does get a little. He's pretty far down the journey at this point, so he gets into like the metaphysical arrangement of like what is the like it's all energy. It's whatever, down to the physics. You break down the particles. Like he gets like real into it sometimes. So look at his old stuff.
You take a cork.
Yeah. Look at his old stuff. Anything from like a few years ago that's Michael Saylor would be pretty good. And then there's one more thing I was going to say that I thought was important, but I forgot what it was. So I guess it wasn't that important. Yeah, cool. All right. I think we did it.
Yeah.
Hour and a half,
That's
special
it.
episode. Congratulations, guys. You're going to become bajillionaires with Bitcoin. Just be smart out there. Please be careful with everything you're doing. I would say now is a good time to go try to make some extra cash. Just even $100 a month, something like, just get something in there.
And sock it away.
Yeah, and sock it away. It's a great savings account.
But not in your sock drawer.
Not in your sock drawer, in a Bitcoin wallet.
In your sock drawer.
You could put your wallet in the sock drawer. You can really do whatever.
And apparently
you want.
it's pretty safe, because unless you wrote your 12 words right on the top of it.
Yeah. You might have somebody try to hold a gun to your head to steal it if your wallet gets big enough. That's possible, but it's probably not a problem any of us are going to face. But
Probably not.
okay, guys.
Are we gonna? Are we saying your name? Or we didn't introduce him by name.
Oh, Conrad.
He's just your dad. Okay.
Yeah.
Thank you, Conrad, for your
Thanks for
time.
having me, guys. Appreciate it. It was fun.
Yeah, of course. All right, guys. We love you.
We are praying for you.
We are praying for you. Go to church.
And as always, yes, go to church,
buy some Bitcoin.
find a girl, marry her, and have some babies.
Yeah, have those babies and preserve the wealth that you are generating for those babies.
Make sure those babies have some Bitcoin.
Yeah. They're going to need it. All right, guys. We'll see you.
Ta-ta.